Hi, I'm John Gersbeck, Chief Financial Officer of Citigroup. Thank you for your interest in Citi and our performance. This morning, we reported results for the third quarter of 2011, and I'd like to take a few moments to go through them with you. Citigroup earned net income of $3.8 billion, or $1.23 per diluted share. This marks our seventh straight quarter of profitability. These results include a substantial credit valuation adjustment of $1.9 billion, driven by a widening of Citi's credit spreads. Excluding that adjustment, earnings were $2.6 billion, or 84 cents per share in the third quarter. A solid performance, especially given the tough economic environment. Overall, revenues were $20.8 billion, roughly flat versus the prior year on a reported basis. Expenses were down 4% from last quarter. As you may know, Citigroup comprises Citicorp, which includes our core businesses, and Citi Holdings, which includes assets and businesses we don't believe are part of our long-term future. This quarter, we reduced the assets in Citi Holdings by $19 billion, and Holdings reported revenues of $2.8 billion and a net loss of $802 million. This loss was more than offset by strength in Citicorp, which reported revenues of $17.7 billion and net income of $4.6 billion. These results include the substantial credit valuation adjustment I mentioned earlier. Excluding the impact of foreign exchange, we grew loans in every business in Citicorp in the third quarter, both year over year and sequentially. Citicorp's net credit losses were $1.9 billion, down 36% from the prior year, driven by Citi-branded cards in North America. We released $585 million in net loan loss reserves, up from $426 million last year. Now, excluding CVA, earnings before taxes of $4.6 billion were roughly flat versus last year, as lower revenues and higher operating expenses were offset by lower credit costs. Much of Citi's success this quarter is owed to the strength of our international consumer franchise. In total, international revenues were $4.9 billion in the third quarter, up 10% versus last year, with growth in all regions. Year-over-year revenue growth reflected continued improvement in underlying drivers, as well as a benefit from foreign exchange. A highlight of the quarter is our consumer operations in Asia, which achieved positive operating leverage with revenue growth of 13% and expense growth of 9% year-over-year. Given how important these businesses are for Citi's future, these are encouraging results. Finally, we ended the quarter with a Tier 1 common ratio of 11.7% and continue to be one of the world's best capitalized financial institutions. To get more in-depth information on today's earnings report, visit Citi's Investor Relations webpage, linked below this video. Thank you once again for your interest in Citi, and I look forward to reviewing our year-end results with you in January.